I want to apologize for we've not been having live sessions for the Sunday Source in about 3 weeks now. So what I've been doing in the last 3 weeks is to just send us recorded sessions. I hope people made use of it. I've been quite busy with some projects, which is eating into the time I'm supposed to be live. So that's why I couldn't go live these last 3 weeks. So I think I've sorted out some things and then we can continue with our marathon live sessions. Okay. So let me know how has trading been for you guys. The whole essence of this weekly session is to help us become better traders, not just analysis. If you have any questions, you need any clarifications, this is like an opportunity to get free mentorship or coaching, however you want to look at it. So give me some feedback in the chat box. If you have any questions, feel free to type your questions, or if you want me to unmute you and then you ask your questions, let me know. But I want to be sure that everybody here, as much as possible, is making the right decisions when it comes to trading. Wisdom said, I've been collecting water. It's normal. It's normal. As long as you are also giving the markets water, that's fine. So don't be collecting every time. Okay. Give me some. So only Wisdom has been trading in the last 3 to 1 month. Who has been trading? Papilo, how's trading been so far? Mr. Ola, how's trading been so far? Christopher, Mr. Desmond, how's trading been? Mr. Eric, Mr. Etherton, Oscar, Mr. Luasho Seni, Mr. Timson, how's trading been? Mr. Seven said, I learned a lot using demo accounts. Nice. It's good to practice. Who has been trading live and then has been making money? Okay. Mr. Wisdom has been, okay, so just in 1 minute, 2 minutes, okay, so that we can go to analysis. So you can unmute yourself, Mr. Wisdom, and speak.
Okay, good evening. Good evening, sir.
Hey, good evening, bro. How you doing?
Yeah, thank you. I'm fine. Thank you very much for the opportunity and for your time as well.
You're welcome.
So I think what I have is a question per se, and I just want to get your insight.
Okay.
So I've been trading for, say, about 3 years now.
Right.
The first year, rocky years now, I didn't know what I was doing. So the next year, second year, I started making profit.
Okay.
Started seeing progress. I got funded. I got like prop firms. I had two prop firms, and I had a couple of investors. Then along the line, after like 6-7 months of being profitable, I just started taking losses.
Okay.
So yeah, that was late last year, around November. I started taking losses, like consistent losses, like loss. So I think it affected my psychology. I stopped, I lost one of my live accounts, my funded accounts. Fast forward to this year, I lost the second one, and I've just been like a break-even trader ever since. It's not like I don't know what I'm doing.
Yeah.
I'll be jumping this from one strategy to another, because of this. I'm like, is my strategy not working? What is wrong? There's got to be something wrong.
Yeah.
So I found that it's psychological. For me, it's not purely technical, because eventually my analysis usually play out. May not play out exactly, but if I had stuck to my plan, it would play out. But I've been having issues with just sticking to my plan. And I don't know if it's because trading is my only source of income for now. So I would just like to get your insight. If you've dealt with a period like this, how you were able to navigate it, and what you'd advise me to do.
Okay, so stay on the line. Now, when it comes to affecting your psychology, what is your risk on those trades that you are taking and then you are losing? Are you using the right risk?
Yes. So I'm not like consistent, like rigidly consistent with my risk, but I never risk more than 1 or 2%.
Okay.
More
so
on accounts.
On a pro firma account, my recommendation is to risk 0.5% per trade. So most of those pro forma accounts would mean that they will require you to lose the account, you must be in 10% drawdown, right? So if you are
Yes.
risking 0.5% per trade, that means to lose that account, you need to lose 20 trades consecutively. So during this period, did you lose 20 trades consecutively? Or even 10
No,
trades consecutively?
no. The issue with prop firm is, okay, for my live, I think for the live, I just, yes, I did for the live. But for the challenges I've been taking, even if you're not risking, because I started becoming very risk averse,
Right.
I'll take a trade and a trade I'm supposed to risk maybe 0.5% to 1%, I'll risk maybe 0.2%.
Okay.
And at the end of a very good setup, very good trade, I'll make only 1%. So it was really hard to pass challenges. So I found myself, I was retrying challenges, like I'll repeat. And eventually, I might end up being on drawdown on one and time will elapse. Maybe just 1 or 2% drawdown and time will elapse. So, or I'll pass phase 1, phase 2, I'll be on drawdown and then the time will elapse. Or, or one of those issues will just come up. So it's not per se the risk issue. I think it's maybe fear. I don't even know.
Okay.
But the risk, I'm not big on taking so much risk.
Okay, so here's what I'll say. Do you believe in your trading strategy?
At some point, I didn't believe anymore. At some point, I'm not even going to lie.
Okay, so that obviously is going to affect you psychologically if you don't, because if anything should affect your trading plan, then it's as good as you're not trading. So you have to build that confidence back in your trading plan, in your trading system, and I understand how it feels when you have streak of losses. For example, I still lose trades up until last week. Everybody has losing streaks. So when I find myself in that position, I just take some time off. I'll not lie to you. I take like 1 week off. And that 1 week, what I'm doing in that 1 week is to backtest. I backtest like crazy. So I backtest my strategy and I see how it plays out over the course of months, weeks, years. So the essence of backtesting is to build back that belief in my trading system. Of course, there's no 100% trading strategy.
Yes.
You understand? So you really need to be confident in your trading strategy. If you feel that market condition has changed, you don't need to totally change your trading strategy. Just revamp it. For example, before we end this session, I'm going to be telling you guys something that I'm adding to my own system right now. I trade smart money concept. Smart money concept is gradually becoming the new retail trading strategy right now. So if you are trading smart money concept now, you might still find yourself losing a lot of trades. Now, the market is constantly adjusting. Market conditions is constantly adjusting because currencies don't stay the same. We are trading live economies of different countries. So a lot of things are happening globally. Economic condition last year is not economic condition this year, right? And you must also understand that when it comes to the forex market, we are just part of the market participants. You have the big government, the big financial institutions, the government, the central banks, and the likes. Everybody that is trading in the forex market wants to make money. The big banks, they want to make money. How will they make money? From us and from other people trading. So, and those big banks, you must understand that they have a team of experienced and skilled traders. So as individuals, you and I, we are competing against a team of skilled individuals. So what would work maybe like last year might not be as effective as what will work this year because they are also updating their knowledge and then catching up to some concept that we are coming up with. All right. So when you find that you are probably having streak of losses, revisit your trading system. Don't totally change it. Just add maybe some more confirmations to it. How best can you make it, solid? So that is what I do, and that's what I'm currently doing to build confidence in what I'm doing. So when you find yourself in that situation, don't lose confidence in your setup. Like I always tell people, like every trading system works. If you are trading supply, support and resistance, it works. But there's a way that you use it, which I'll explain to you. If you are trading heads and shoulder or W and M pattern, it works. But there's a way that you use it that is going to work. Okay, even though as SMC traders, we have demonized chart patterns, but chart patterns still work. They occur on the chart every single week. So you just need to know the best time to take entry on those setups. So in essence, so Wisdom, what I'm saying is do back testing. You need to believe in your trading strategy again. All right, so do a lot of back testing. If you need to add some more confirmations into your trading checklist before you take a trade, please do. And that will really help you a lot. Okay, so by confirmations, you might choose to maybe use like an indicator to add to your confirmation. Okay, you can leverage on maybe like all those trend-based indicators or some oscillators to add extra confirmation to taking entries. Or you only take entry on currencies based on their time frame. For example, if you are trading AUD USD, the trading session for AUD is the Sydney session. The trading session for USD is a New York session. That means you're only taking, if you're trading AUD USD, you only want to take entries during the Sydney session and the New York session. That's just a suggestion. Or you now also want to add maybe like extra layers of confirmation to your entry. So if normally you are taking entry on maybe 15 minutes, you now want to go maybe a time frame deeper to look for some good entries and additional confirmation. So there are a lot of ways that you can optimize your trading strategy. All right. So I don't really know how to tell you how to optimize it because I don't know what you trade with, but you just need to be creative with a lot of options available to you. And then most importantly, learn liquidity, because learn liquidity and how to spot liquidity in the market. All right, because a lot of times after there's a liquidity grab, that is when there's stop hunting, market usually moves in the right direction. So you want to wait for liquidity to be grabbed first before you now start taking entry. I hope that makes sense, my brother. Mr. Wisdom, are you there? Okay, I think it's out. Okay, you're muted. Okay. You can unmute yourself.
Okay.
Do you?
Okay.
You
yes.
understand?
Yes. Yes, I do understand. You said you don't know this strategy I trade, so I don't know. Maybe you can give me some pointers. I trade primarily with Elliott wave, but I have like other confirmations, but principally I use wave principles to trade.
Okay, so add supply and demand to your Elliott wave. I think it really helps you.
Okay.
Yeah. Take entry based on when there's a correction, and then at that correction, ensure that it is at a demand level or a supply level, and always wait for liquidity to be grabbed first before you take entry.
Liquidity. Okay. Thank you very much, sir. Thank you.
Yeah. Okay. So any other person that wants me to answer that question, and then we analyze ASAP. All right. So while you are doing that, send me the pairs that you want us to look at for the week. Then while you are doing that, let me share my browser. As always, Papilo, the GU boss. USD, I want to, so I want to share the economic calendar with you guys. Sometimes it's very, very important to check the economic calendar, to check fundamentals, because this is what really moves the market, to be very honest. Mr. Samuel, you're welcome. You are new in Forex, okay? Are you trading actively, or you're still learning the basics of Forex? Let me know in the chat box. So as you can see, guys, this is the economic calendar for the week. And then as you can see, I have filtered everything to just show me the red folders. Now, red folders are high impact news. And as you can see, every day of this week, we have high impact news on Monday, on Tuesday, Wednesday, Thursday, and Friday. All right. So that means you are most likely going to see a lot of moves every day of this week. And most importantly, we want to check out what's going to go on Wednesday, Thursday, and Friday. We have the most news on Thursday. So Thursday is going to be might be a very crazy day on USD pairs, Euro pairs, GBP pairs, CHF, AUD, and NZD. All right. So because the market is set to make a lot of moves, we might be open to see a lot of entries this week if we position ourselves, okay, appropriately. Okay, hold on, let me read this. I've had ideas in the past. All right, so Mr. Samuel, I'll give you, are you in the Telegram group? I'll give you access to the foundation course so that you can have a proper navigation in this market. All right, so let's go back to the chart and then we'll take a look at a few pairs. So we are checking out GBP USD first. Yes, Papilo, I think so. All right, so if you're not in the group, I'm going to type the link right now in the chat box. So we have a Telegram group where usually it's supposed to be a group where a community where we collaborate, share trade ideas, and then if you have any questions, you can ask your questions. All right, so join the group and then you can get support from the group, okay? So let's check out GPUSD real quick. So this is GPUSD. As always, what I want to do on GPUSD, let me delete everything here. So we want to start from the higher time frame. And why are we checking out what's going on higher time frame? Because we want to know the real move, what's going on a macro level. Now, on the macro level, we can see that price is in an overall downtrend. That's on the monthly, right? Overall downtrend. So ideally, so we are in a corrective phase, right? So price is doing a correction right now. So price is doing something like this. So we're in a correction. Okay, so if everything goes according to plan, we can wait for price to get to some sort of an equilibrium. So we can see price is exactly at 50%, is at equilibrium right now. That's on the monthly. And it might be a good time to start looking for opportunity to sell GPUSD. Now, let's go to the weekly chart. Weekly, what do we have on weekly? Same market structure on weekly. And then I'm also seeing some form of liquidity grab here on weekly. Now, this is a downtrend, and then you can see price retracing into this supply here. Now, this is supply level that we have here, over here. And then what can we see as well? I can see that price grabbed liquidity. So this move here took out a measure of liquidity over here. Okay, and ideally everything here is also in a supply. If you take all of this range here, okay, this is a supply zone. So we've seen price is an overall supply, and then we've seen a grab of liquidity. So ideally we can expect a downward move from here. If not a strong move, but a little bit of downward move. Let's check out what's going on the daily. So we don't have any concrete reason yet to take entry for a sell. Okay, so but we are building a story based on this. Now, what do we have going on here? This is a daily time frame, and on daily time frame, what can we see? We can see that price is still very much bullish. Now, we want to sell here because we know that price is in a supply zone on the weekly chart. Price has taken some amount of liquidity. So as you can see here, price took liquidity, and then we saw a bit of retracement here. So that happened, right? But on the daily, price is still very much bullish. As you can see, the strength here is still, price is still in an uptrend on the daily. So it does not make sense to sell yet because we don't have a reason to sell yet. So we are only going to sell if we see a reason to sell, possibly on a lower time frame, like 4 hours or 1 hour. But daily is still saying that price is in an uptrend. So we might possibly see price go all the way up like so, because this overall is a block of demand here. So this is a demand range that price tapped into. So price tapped into this zone here, and then we are possibly saying, so we might possibly see a break of this zone. Okay, possibly. All right, so let me go to the 4 hours, and in the 4 hours, let's see something if it's going to be clear. So on the 4 hours, what do we have here? So we have this impulse correction, okay? Impulse correction, impulse. So this is the market structure on H4, and what happened over here? Give me a second. It's very, very simple. Now, this is a block of demand here. Taking a look at this last bearish candle, this one here. And what did price do? Price came down like so, okay? Took out this liquidity here. And then we are possibly seeing, so price is currently reacting from this demand level. And then possibly we might see a higher high from here. So looking at this, price is still very much bullish. It wouldn't make sense to look for sales yet. Okay, so personally, I like to get my point of interest when it comes to higher time frame from the 4 hours. So if the 4 hours is not giving me a pointer to sell or buy it, I don't do anything. So based on what we have here, it's very, very simple. H4 is still saying that price is very, very bullish. All right. Now, as you can see, I know that last week or last 2 weeks, everybody's was expecting the dollar to gain some strength because the dollar index was showing us that price was in a demand zone. So a lot of people were has been selling GBP USD and Euro USD. Okay, but you know, like everybody has been very, very wrong. So a lot of money has been made. There's been a lot of stock hunting and liquidity grabs in the last 2 weeks on this pair. All right, but that might be a pointer that the sell is incoming. This sell might just be incoming. All right, might just be incoming. Now look at this, and another way to look at this particular move is simple. Let me delete everything here. We know that price, we want to sell this guy. Okay, now check out this reverse return, or like change in momentum. Now uptrend here, price has done this, price has done this. Okay, now this is a higher low here, and it has been violated. This higher low has been violated. So when we see something like this happen, it might just be a pointer that we are seeing, we might be experiencing a possible shift in trend. And a lot of times, this is what happens. Price will do this a lot of times, and then we'll see price retrace. Price will retrace to the extreme demand, to extreme supply level here. All right. So we've already seen price retrace into the zone. So possibly over here now, we might be expecting, if we see opportunity to sell here, we should grab it. Let's go to the 1 hour chart and see a possible sell scenario, if any. So on the 1 hour, we would also like to see price shift to bearish. On the 1 hour, check out, price is also still kind of bullish. A very, very tricky situation that's going on with GBPUSD. We are seeing this here. So GBPUSD on the 1 hour is still very much bullish. It's still bullish. All right. So because this is a demand level right here. All right. So the only time that you would sell right now, GBP/USD is primed for a buy, It's primed for a buy. So I think a lot of things can happen, right? So if a buy would occur here, we want to see liquidity taken out. So price would most likely come down a bit, take out liquidity, and then go up. Okay. If that is not going to happen, then if we're anticipating a change of direction, we're expecting price to come down like so, break this zone totally, and then would have a reaction, a retracement. So at that retracement now, you can now look for your sells. So we just have to wait for price to do its thing. Papilo, I hope that makes sense to you. Right now, GBPUSD is still very much bullish. Still bullish. We should not sell GBP. If you sell from here, right, you are on the wrong side of the market. You want to wait for the bearish intention to be properly formed, so that you'll be very, very sure of what you're doing. Okay, so and then for people that would like to buy, because price is in a demand level, if you like to buy here, price will not go up immediately. I can almost guarantee you that. What price will do, if price is going to buy, let me make this bigger. We want to see price take out liquidity. This is liquidity here. This liquidity here, because some people bought here. So you want price to come down a bit, grab liquidity, and then when you see a buy set up, you want to take that buy, because that's enough liquidity to move the price, in opposite direction. Okay, so let's check out another pair. Let's check out USD/JPY. USD/JPY, where are you? Okay, so as always, let's start from the higher time frame. Let's start from the weekly chart on USD/JPY. Okay, so let me delete my markups here. Now on USD/JPY, this is, let me start from the monthly. Monthly on UJ, we can see a very, very clear and distinct uptrend. All right. On weekly, what do we have on weekly? We can see that price is in a block of demand here. So if we take this whole demand, this is a range of demand here. And then let me make this bigger. So there's a demand level here. There's a range here. This whole range, if you take it, it's a demand. And then what can we see in that range? You can see that there's been liquidity grab. So price, so some people would have taken a buy entry from here. So a lot of people were stopped out. So this might be a good time to look for buys. So let's go to the 4 hours. Let me delete this. So on 4 hours, what do we see? Okay, so price is still very much bearish on 4 hours because this is structure on H4. You can see impulse correction. You can see this. All right, so if anything, price wants to possibly retrace into the zone. If price retraces into this zone, then you might see a push down. So possibly there might be another liquidity grab, possibly because 4 hours is still bearish. Okay, so we're in the corrective phase on H4. So if you have to take this right now, in a second, if you have to take entry based on 4 hours, now all of these here is a block of here. This is a supply. Okay, now we have seen a tap into that supply range. So what we should be expecting this coming week on UJ will be possibly, we want price to take out this liquidity. All right, because some people that entered into this move needs to be taken out now. So price might go up a bit, take out people's stop losses and some pending orders as well. Okay, do this and then we see a possible downtrend. All right, so this is what I'm talking about. For Mr. Wisdom that trades Elliott wave, you want to add liquidity grabbing concept into your entry. So take entry only when you've seen a liquidity grab in the zone you are looking to take entry. So that will greatly improve your strike rate. Okay, I can assure you that. So this is what I'll wait for on USD JPY. Price is bearish on 4 hours. So I want to wait for price to grab liquidity here and then I sell. Then this would be an ideal take profit because this would be a liquidity grab. Now, all of that I'm learning from what I'm seeing on weekly. All right, so price is still very much, don't forget the big picture. Price is still very much in a demand, but remember this is a weekly. Things take time to happen on weekly. So ideally, we are looking to buy. The ultimate move on USD JPY is a buy setup. Is a buy ultimate. But before that buy should happen, liquidity needs to be grabbed a whole lot before that happens, right? So that's the essence of what we're doing. So 4 hours is giving us market structure downtrend. Again, wait for price to come up a bit, take our liquidity, and then you can look for sales. When you sell, this zone will be a good zone for your TP. And then when price gets below this zone, you now want to start looking for opportunity to buy because weekly says price is in a demand. We should be looking for buys in this zone. So when you see a buy setup, you want to buy, and then you can be very patient and then hold it all the way. Because if that buy moves, if that buy setup should align, it's going to be a very, very fast move, because price has taken out liquidity here. Okay, hope that makes sense, Mr. Desmond. So let's check out another pair. Another pair, which one are we doing? Euro, so we'll do Euro USD and gold. Let's do gold. Let's do gold. So this is gold. Let me delete this. So let's check out what's going on gold. Let's check out gold on weekly. Okay, we are seeing textbook entries set up here on gold. Price is in a downtrend. You can see this over here. All right. And then if we take the whole of this range here, this supply range over here, what can we see? We can see a lot of liquidity grab. So this was price came here. So this green, let me make this bigger for you. So this is the first mitigation of this supply. And then this green candle here, you can see as it took out liquidity. All right, so these are not that liquidity. So price has taken on liquidity here again. Price taken on. So we have seen multiple liquidity grabs in this zone, even here at the extreme, okay, which is also tying into this block of supply here. So what this is telling me is that this might be a good zone to look for sell scenarios, to sell setups on gold. Now that's on the weekly chart. Let's go to the daily. So daily is still very much bullish. So we are seeing a very similar setup to what's going on GBP USD. All right. So multiple liquidity grabs in the zone. All right. So that's the let's check what's going on the 4 hours. So on 4 hours, what can we see on 4 hours? All right. So we are seeing a change of trend here. So we have impulse move, correction, impulse here, correction. Then we're seeing this impulse, higher high. And then you can see this higher low here got violated by this move. Right? And then a lot of times as well, price tends to retrace into the extreme. This is extreme here. This is extreme demand. Extreme supply rather. Let me delete this. So price has retraced into this extreme here. That's on H4. So you are seeing this retracement here. Okay. So if we, now this is still a very aggressive way to look at the trend, the possible trend shift, because ideally, if you want market to play out the way it is meant to play out, how do we know that the trend has shifted fully? You want to see the impulse move form ahead. So if this happens, then we have assurance that okay, price has shifted from the uptrend to downtrend, and then what you wait for is for price to retrace into a supply and then you sell. Okay, but we looking to sell from here, all right, is an aggressive move. So a lot of times it works, maybe 3 or 4 times out of 10 times, it does not work. 3 or 4 times out of 10 times, price just takes out our liquidity and then forms higher high. All right, so this I'll classify it as a risky move. If we are looking for a sell here, it's risky because we are seeing a very strong correction here. So if we're going to sell, you want to go to a lower time frame. Let's go to like 30 minutes, and we want to see what a bearish momentum. So price must have shifted again from bullish to bearish. Okay, but on 30 minutes, what do we have on 30 minutes? So let me mark out the market structure real quick on 30 minutes. So you have this impulse, correction, impulse, correction, impulse. And then we have this correction. And then you have impulse here. Now, let me make this bigger. If you have been following me for a while, you will know that this high is truly, let me make this big. This high here, this one, is higher than this high. But the body of the candle did not close above this high. So price wicked this guy. So I wouldn't classify this as a break of structure or like a true higher high. I'll just classify this move right here as a liquidity grab or a stop hunt. Okay, so why am I telling you that? Because I wouldn't classify this retracement here. I wouldn't classify this as a demand level, because for me, what validates a demand or a supply level for me is that move must break structure. And break of structure for me is price, the body of the candle closing above the previous higher high. Meanwhile, the body of this candle did not close above the previous higher high. So I wouldn't classify this as a valid demand. Okay, so, and when I see this a lot of times, what's the signal to me is a possible an avenue to shift structure, like maybe like a reversal. So let me delete all of this, and then we see possible. Let me see what's going on 15 minutes before I draw my conclusion. Okay, so on 15 minutes, what do we see on 15 minutes? So interestingly, on 15 minutes, we can see the body of the candle close here. All right, that's on lower time frame. So if you are taking a cue from 15 minutes, that means on 15 minutes now, this level right here is a demand level. And what can we also see on this level? Oops, excuse me. Just follow me real quick. You can see price retracing into this demand like so here. This retracement. And then what do you see price doing? This is a liquidity grab here. So move like this. So price is grabbing liquidity of 15 minutes, like so. So over here, possibly on Friday. So if you take entry after a liquidity grab, it's best to go to a lower time frame. So if you have gone to, let's say, the 1 minute time frame, so most people wouldn't trade this. Okay, and it's not even very clear on gold because of the balance happening on gold, but market structure will be something like this. And then you can see that price breaking previous structure, this happening, okay? So ultimately for gold, you would have taken entry if you have seen this on gold on Friday, possibly here aggressively or here, and then have been in profit here. But let's check out something that we can trade out this week on 15 minutes on gold. Let me delete everything here. So on 15 minutes, price already shifted. So don't let's forget what is going on the weekly, the general overview, the general story of this guy. Ideally, we are looking for a sell. Don't forget, okay, price is here. This move here, and then we can see a slight liquidity grab, this move here. And of course, if you also take a critical look at it, looking to the left-hand side over here, this is also another range of supply here. Okay, so price ideally is in a how do you put it, like a cluster of supply. So, and in supply clusters like so, we should expect a lot of liquidity grabs, right? Ideally, we should see price drop anytime soon on gold. It might be this week or it might be next week. So if we know that price is going to drop eventually, what would be the best thing to do? You know, like I always tell you, I like to take my higher time frame point of interest on the, let me delete this, on the 4 hours. Okay, so this is what I'm seeing on 4 hours. Give me a second. So I can see a block of supply here. So I will look to sell this guy here. So I'm looking for reversal pattern here. Now 4 hours is telling me that this place I should sell. So at this zone, I would not be looking for anything to buy here. I'm looking for sell. So until price breaks this high, until price breaks this high here, that's when I'll start looking for buy opportunities after the retracement. So right now, 4 hours is telling me that price should sell from here based on how price has occurred over time. So if I go to lower time frame like 15 minutes or even let's say 30 minutes, I want to look for a sell opportunity. So in this case, I'll be looking for price to correct, to shift. Right now, price is still very much bullish. So I want to wait for price to break this low here, like so. So I want price to break this low. Once this low is broken, I'm going to wait for price to retrace into this supply. So it's going to be this supply here. It's going to be this supply or this, or back to this extreme. Hope that makes sense, Mr. Desmond. So that's what I'll do on gold. So it will take a lot of waiting for this to happen, but it's best to only wait for perfect setups, right? So let the market do its thing, let the market take out liquidity. And because this is a cluster of supply, a lot of manipulations will tend to happen here. But if you are patient enough for price to come to you, right, your strike rates should improve. All right, good. So let's check out Euro USD. So your USD should be similar to GBP USD. Price on the weekly is on a downtrend, as you can see, right? Price is reacting to this extreme supply here, and the first tap into that supply zone, the first mitigation, you don't want to take entry based on the first mitigation. Now, this is the first mitigation of the supply. You always want to wait for price to take out the first mitigation, right? So this is a form of liquidity grab here. So it makes sense to this week look for sales on Euro US, because on weekly charts we've seen liquidity grab here. So if you go to lower time frame, like 4 hours, so let's go to 4 hours chart. So what do we see on the 4 hours? Something very, very similar. All right, so let me mark out market structure here. So we have impulse, correction, impulse here, correction here, impulse. All right, so I'm price retracing to this demand and ultimately price going up. Okay, so what you want to wait for, if you sell this guy, price should come back down into this zone here. This is the higher low that needs to be broken. Once price breaks this zone here, that's your cue that indeed the trend has shifted, and then you want to wait for price to retrace into this extreme or another supply here, and then you sell. Okay, so it's just for you to wait for market to play out. So let's see if this, let's go to the 1 hour. Let me check something. 1 hour. So on the 1 hour, okay. So this is what I don't wait for, guys. All right. So I'm not seeing anything immediate on Euro USD until possibly Wednesday or Thursday. That's when we're going to see crazy move on Euro USD. Now, as you have seen all of the high impact news on USD this week, and based on what has been happening in the last 2-3 weeks on USD pairs, there's been a lot of liquidity grabs in the last 2 or 3 weeks. So possibly this high impact news is what will trigger the real move. Ideally, the USD should gain some strength. All right. So maybe that strength is going to be pushed into the market this week. We don't know. All right. But you want to properly position yourself this week. Okay. So that's what I have on Euro USD. I wish I can give you something very, very accurate that you can trade as from Monday or Tuesday, but nothing has aligned for me yet on Euro USD. So personally, what I recommend or advise is for you to wait. Okay, so to wait. Or if you're a very, very aggressive person, what you can do is to wait for price, because let me delete all of this. A lot of scenarios happen when you are trading in the market. And what I advise is that don't try to predict the market movement. We always want to react to it, because prediction is what has enabled a lot of losses in the market, right? Because when you predict, a lot of us are so sure that price is going to reverse, but you don't control the market. How can you be so sure that price will go your way? All right. But if you have a mentality to react, okay, so for a reactive move, you are only taking entry when the footprint of market, when you see the footprint of market makers, and then you are seeing market structure shift in your direction. Okay, so which is why I'm saying this is a higher low. For this move, entire move now, this right here is the higher low, right? For price to shift from bullish to bearish, we need to see a violation of this zone, like so. Once that happens, wait for the retracement to happen into a block of supply, and then you find yourselves there. Now, your strike rate would increase because weekly I've told you that price is in a supply zone. You have also seen grabs of liquidity on weekly. You have seen a sell setup on 4 hours. So you are most likely going to have a profitable trade when you look at the market from that particular standpoint. Okay, good. Any more questions, guys? We have been here for 1 hour. Any more questions, or let's take the last currency pair that we should analyze for this week. Okay. So let me get some feedback in the chat box. If you understand what I've been saying so far, just give me some feedback in the chat box. Just send me a message in the chat box. Let me know if you are learning something. Okay. And most importantly, you want to try to rewatch this recording and mark up this analysis on your own chart as well. So the recording, I'm going to upload it on my YouTube channel, possibly tonight or tomorrow morning. I'm going to send a link into our Telegram community. So watch the video again, do your markups, and then you should be good. All right, you should be good. If you have been following our analysis every Sunday, you won't be getting into so many losing trades. Honestly, you won't. All right, Mr. Oscar, Mr. Desmond, thank you. Mr. Desmond, AD USD should possibly be the same thing going on Euro USD and GU. Almost every USD pair would have the same market structure right now. Where's the AD USD? Okay, you can see is a similar setup going on. So if you understand what's going on Euro USD and GU, the same similar thing is going on AD USD. Okay, because USD is a quote currency on all of these pairs. Okay. All right, guys, any questions? Let me take a last question, not a currency pair, maybe a question regarding your trading, just like Mr. Wisdom asked his question at the beginning of this session. Okay. If you want me to unmute you, let me know, and then you ask your question real quick. The whole goal of this Sunday source session is for you. It's for you guys. All right. And I want you to get the best value from this as much as possible. Okay, because when you eventually ask your question on the Telegram group, I might not be available to answer immediately, or I cannot just explain via text. But this is something for you to ask your question in real time. And then I give you feedback. All right, so I'll just wait for a few seconds. If there's no questions, that's not a problem. We'll just wrap up for tonight. All right, Mr. Olainka, good evening. Okay, good. All right, so no questions, that's good. So in the absence of questions, okay, Mr. Oscar is asking, do you make use of candle patterns like Evening Star and others? No, I don't, but they can be very, very useful. Okay, so they can be, how will I explain this to you? Candle patterns are useful and can also be manipulated, okay? Because these skilled guys trading for the big financial institutions, they know that retail traders know these patterns, okay? So you might think that maybe you see a doji now, and doji maybe signifies a reversal. So if a doji happens at a support zone, you might be thinking that possibly you should buy, but the market maker also know that a lot of people would want to buy because that candle formed. All right, so that is their own cue to take out liquidity. So if you are using Evening Star or Morning Star or like 3 white soldiers or like one of those candlesticks, you have to be very, very careful, and you need to use them at very, very interesting point zones. Okay, usually you want to use them after liquidity has been grabbed. Okay, so in essence, if there's one thing that you take home from this weekly session is understand, go home tonight, tomorrow, this week, and study liquidity concept. Go and study it. I'm sure if you go on YouTube, you would see a lot of videos that will teach you the concept of liquidity. All right. So once you understand how liquidity is being grabbed in the market, you now want to start using your trading strategy or your entry strategy after liquidity grabs. When you do that, you find out that you will not be losing as many trades as you used to. And then your strike rate will, of course, increase. Okay, Mr. Desmond wants a question, so I'm going to unmute you. Mr. Desmond, unmute yourself and speak.
Okay, thank you very much for the opportunity to ask my question.
Yes, sir.
Yeah, so I have observed most of the time, if we check our analysis or our chart, we discover that on the monthly, the pairs that we're analyzing will be an uptrend if we're analyzing, because we, like our analysis this evening, we check it from the monthly, the weekly, the daily, and also the 4 hours before the 1 hour.
Okay.
So my question is, if we notice that a particular pair is trending up on the monthly, then we check on the weekly, we discover that it's trending down on the weekly. Then on the daily, it's giving us another structure. So what can we do in that type of situation?
Yes, okay. Are you done with your question? So I'll answer you.
Yeah.
Okay, good. So I think I understand what you're saying, which is why, so let me give you my own structure here. So it's good to have time frames that you trade on. So for example, this is what I do. Let me write it out. So when I check out my higher time frame point of interest, so I look at 3 major time frames. So my main time frame that gives me my point of interest, my POI, okay, is the H4, is the 4 hours. Okay, so after the 4 hours, so I need to now, so my second level that I look for a confirmation. So if my point of interest, H4, is saying that I should buy bullish, okay, the next level that I'll go to, okay, is the 15 minutes. So 15 minutes as well, I want to wait for price to shift to also give me a bullish confirmation. So I can either decide to take entry just from 15 minutes, or if I want to maximize my risk to reward, I now go to the 1 minute. 1 minute as well, I'm looking for the same thing to happen, bullish. All right, so it's the confluence that you're looking for. So because there are times that if I don't have a set of time frame that I trade with, I might be confused, because H4 might tell me that price is bullish, but H1 is saying that price is bearish. But because I've structured my trading plan to only check some certain time frames, and then I've seen how they work over time, that gives me enough confidence in verifying what each time frame is telling me. Remember, our last few weekly meetings, I've been telling everybody here to understand what is called the fractal nature of the market. Okay, the fractal nature of the market. So take time and understand fractal. So the market, the first market structure is fractal. So what is happening on H4 can also happen on 30 minutes, on 15 minutes, or 1 minute. So what you are waiting for is the alignment in market structure. I don't know if I'm communicating, Mr. Desmond, but
yes,
have specific timeframes that you want to trade on. Don't just jump from one time frame to another. You won't really have a plan. All right. So if your own plan is to look at the 1 hour and then take entry on 5 minutes, do that. If your own is to look at the daily and then take entry on, let's say, 1 hour, do that. Have a structure your trading. Don't be everywhere. Okay. You don't need to trade on every time frame, just on a few time frame. So let your trading plan be guided by a few time frames. Okay, so that really helps you a lot. But most importantly, understand the fractal nature of the market. So once you read up on this, it will shed light on what I'm telling you right now. Is that clear?
Yes, sir. Thank you so much.
All right, boss. You're welcome. Okay, so guys, let us wrap up here tonight. We've been here for a bit over 1 hour. All right, so if you have any questions, you can reach out to me personally or ask a question in the Telegram community, and then I'll get to you as soon as possible. So guys, let's have a remarkable week. I wish us all the very best this new week, okay? God bless everybody, guys. I'll see you next week, Sunday, for the next Sunday Source session. Bye-bye, guys. Cheers.